Hi, my name is Jayoza. I teach, mentor, and coach people on public speaking so they can give winning, high stakes speeches, whether it's one on one, in a small group, or in front of a large audience. I want to talk about investment. I know this is confusing for a lot of people, and there are lots of books out there, shows out there where they try to tell you with buy this stock, buy that stock, go into real estate, go into bonds, buy hedge fund, etc. It's confusing, and people always ask me, Jay, can you give me a financial advice? Like I'm some kind of an expert. And at one time, I thought I was an expert, but after a while, I realized that it's just not my thing. I found it boring. Some people get into it, I didn't. And I said, what do I do? Because I can't trust financial advisors because they're all terrible, most of them. Okay, I know there might be some good ones out there that I might be offending, but let me tell you, most of them have no clue what they're doing. Because the simple answer doesn't require a financial advisor or reading a book by Tony Robbins on wealth or whatever he's calling it these days. The only thing you really have to do is buy an S&P 500 index fund. And the reason for this is you don't have to think. A lot of people think that they're smarter than the market. Unless you're so devoted to this that you are looking at it daily, almost like on an hourly basis, if that's what you're doing, then you might be able to do well. But I haven't found that many people who are that good. And these are professionals I'm talking about. So I have some money that I've invested for my son. And you know what I bought? Two funds only. They're stocks. They're traded as, they call ETFs, right, on a stock exchange. And I think they're on NASDAQ. One is SPY, SPY, which is an S&P 500 index fund. So what they do is they take all the top 500 companies and buy it put in one basket, and they sell it as a stock. And let me tell you, it is hard to beat an S&P 500 index fund. And the other one is the one that tracks some of the top companies at NASDAQ. It's called QQQ. Maybe there are four Qs, okay? QQQQ, okay? And that's it. And you don't have to worry about it. Because if the economy is going down, believe me, the stock you're holding aren't going to be doing that much better. But if one stock goes down, then you're wiped out. If one stock goes down, and this happened to me, and I'm not even, I invested like this for my kids, but for myself, I haven't completely transitioned it. So I had Apple, and Apple had gone down close to 30%. You know, it's hard to make up 30% that quickly if you're in Apple. You have to practically sell it, and that means that the next company that you buy is going to have to outperform even more, which is very difficult. So what you then tend to do is you keep playing this game like I'm going to buy this, I'm going to buy that, and it completely throws off your strategy. So my daughter, who started work about a year ago, came to me and said, Dad, what should I invest in? And she thought I was going to give her some real sexy names of stocks. I said, listen, just buy the S&P 500 index fund. And if you want, you can look at the QQQQ. And if you want to really look at some specific industries, look for an ETF fund in that. But don't buy individual stocks. It's too dangerous. And unless you're following it that closely, I wouldn't worry about it. But I said, if you really want to do it where you feel like you have some control, split it up into thirds. One third buy S&P 500, one third buy QQQ, and one third you can buy some individual stocks. And then I said, if an individual stock, I said that I have a simple formula. Pick an industry that you're interested in and go for the top dog. Okay, this is your money. Don't take chances on some small player who might make it. Likelihood is they're not, and you're going to keep on losing money. There is the rule of three. The top dog always tends to do well, then the second one, and then the third one. That's how it works in any field you look at. And why take on that extra risk? This is your hard-earned money. So like, let's say if you're interested in, right now, the thing that seems to be really hot is cloud computing. I said, well, then you buy Amazon. They're the top dog. It's very hard to knock off the top dog. And you stick with that. Similarly, you could buy Salesforce.com. I said, but pick the top dog. Do your research and pick the top dog. But again, you got to do research. I said, you can save yourself a lot of time Just buy the index fund. So if you're watching this and you're the kind of person who's confused, like, oh, finance, it's too complicated. It's not. Let me just tell you. Don't waste your money buying books, reading, and all that. You don't have the time. Go to Yahoo Finance and do a search and type in under quotes SPY and then look at it. And then do QQQ. Call up your broker, whether it's Scottrade or whatever, Schwab or Ameritrade. Open an account, send them the money, and just tell them, I want to buy 100 shares of SPY, and then forget about it. You're done. That's it. You're done. You don't have to keep watching it. You don't have to say, wow, did it go up or down? You don't have to worry about it, because historically, it's hard to beat an S&P 500. And on the average, they return close to 7%, and nobody beats that. To try to beat that, you're taking so much risk. It's just not worth it. Yeah, you may do well. Somebody out there may say, hey, I made 100%. Over the long term, they're going to lose it. I mean, this is how it works, okay? So make life easier for you. Don't leave your money in the bank. There's some savings account where you're getting practically nothing. Put it in a stock, put it in some stock account and buy these index funds. And that's it. It doesn't require a lot of smarts. You don't have to be a genius. You'll look like a genius when you look at your return 10 years from now. Okay? Try this. It works. Let me know what you think. And good luck.